Hello, I am Mitali Soni, second year student of Bispilani Hyderabad campus, presenting stock pitch report on MarutiSuzuki India Limited as a part of final assignment of Equity Research Initiative. The values calculated are my own and have no bearing or responsibility if they are wrong or misrepresent MarutiSuzuki India Limited. Equity research was done via fundamental analysis, ratio analysis, and equity valuation. Automobiles have become an integral part in our day-to-day life. From the graph we can see passenger car sales in India have been almost doubled from the year 2009 to 2012. MSIL, being an automobile company, generates revenues by selling cars and car products. Service is a major revenue generator of the company. The list of the services offered by Maruti Suzuki includes finance, insurance, genuine accessories, genuine parts, driving school and auto card. Fundamental analysis was carried out via SWOT analysis and Porter's 5 forces. From SWOT analysis, we looked into various internal and external factors. To conclude, Maruti Suzuki has 37% of the Indian passenger car market. It has a strong presence in second-hand car market. The network of dealers and after-sales services is also widespread. MSIL has many opportunities lying in front of them, like developing hybrid cars, fuel-efficient vehicles, building a global brand, etc. On the other hand side, the company is unable to penetrate into the international market. It's inefficient in employee management, resulting into strikes and worker wage problems. Ever-increasing fuel prices and intense competition from peers are the threats to company. Coming to the Porter's 5 forces framework. To the ratio analysis, EBITDA margin, return on assets, return on equity is the least in case of MSIL, implying the least profitability and inefficiency to manage its assets. Highest current ratio implies that the company is in much better position to pay off its current liabilities than its peers. Least debt to equity ratio implies that company is least leveraged. The P/E ratio is comparable to the industry, implying that investors are interested to invest in MSIL. Talking about the P/S ratio, lesser the better. Now looking at the financials, we can conclude that Tata beats its peers in all the aspects. Coming to the statistics, Tata has the highest market capitalization while MSIL has the least. Talking about the EBITDA margin, Bajaj has the highest EBITDA margin, which is 20.19%, while MSIL has the least. Talking about the revenues generated by MSIL, there is a constant increment from the year 2009 to 2011, but there is a sudden decrease in the year 2012, which is because of the lockout of one of its major plants, Manesar. Coming to the valuations, I have calculated various variables like risk-free rate, RM, beta, cost of debt, tax, cost of equity, and expected growth rate. I have also calculated WE, weight of equity, and WD, weight of debt. I came up with the WACC, which is equal to 8.67%. I also calculated FCFF and FCFE, and I came up with the intrinsic value of the share, which is 242.14 rupees, while as the current value of share is 525 rupees, signifying that the stock is overvalued and thus recommending a sell. Coming to the summary, fundamental analysis. Findings from fundamental analysis indicate MSIL is performing well in spite of the tough competition from its peers. The company has good product portfolio, self-competing brands, and in order to increase its revenue, it needs to tap the global market. Ratio analysis. The performance of MSIL is poor compared to its competitors, Bajaj Auto, Tata Motors, etc., though the company has large chunks of cash and very low debt. Equity valuation. Valuation was done using FCFE model and intrinsic value was found to be less than the current price, so the stock is undervalued and thus the sell recommendation. So my final recommendation will be sell. Thank you.